Hello everyone once again, and welcome to another episode of my company health check series. So for those of you who have not watched my previous episodes, do remember to check them out as I cover anything from the markets all the way to the economy and as well as individual companies like the company health check series that I'm doing today. So here I will share occasional updates on my portfolio companies I invested in and I'm still holding, and analyze them using the bottom-up approach, usually looking at the quarterly reports all the way to the full year and beyond. By journaling my research in video format, I hope I can make myself more informed of my past decisions, whether it's right or wrong, and also share my insights with everyone here. Hopefully, all of us can benefit in some way, especially to fellow value investors like myself. So today, what I will be doing is I will be talking about my new investment in LVMH. I believe many of you have heard of the Louis Vuitton brand, and for those of you who do not know, they sell high-end luxury goods that started from leather goods, such as the luggages, the travel luggages. That's how they started. Okay, so recently LVMH just announced their Q4 2023 and full year earnings. So before I start investing, I actually usually create myself a framework to screen good businesses to begin with, which is I will look at a SWOT analysis. So if you have not heard of the SWOT analysis, it's actually the strength, weaknesses, opportunity, and threats framework, right? So without further ado, let's deep dive into LVMH. So for the strengths of LVMH, this is one of the few companies that have demonstrated consistent net profit margins in the double digits since 2006. It has demonstrated resilience during each major crisis due to its exclusive customer base. Therefore, I would say this is a rather defensive business. The brands that LVMH Group holds are mostly top quality, high-end luxury brands. Therefore, the premiums attached to these brands are already highly valued by the market, thereby creating a desirability effect for them. There is a cult following, particularly for the LV brand, and also many other brands under their portfolio, such as Christian Dior and Celine. This cult following creates a hard loyalty to these brand names, thereby building up a natural moat into the company. Pricing margins is also sustainable, as prices within the LVMH portfolio is not affected by demand or supply. Most loyalists will buy despite price increases, creating an inelastic demand for the brand. Over here, you can see sneaking queues outside the Louis Vuitton boutique, taken from a Shanghainese mall in China. Even in Singapore, where I live, the LV boutique here also garners similar queues outside the boutique. So these queues are also a familiar sight in Europe when I visited Germany or Paris last year. Germany and Paris last year. There were also other brands around, such as Gucci or Burberry, but they did not have as many customers in them. By the way, Gucci or Burberry is not housed under the LVMH group. The queues at LV in Europe consisted mainly of tourists, some from Asia and some from other parts of the world. So let's look at the weaknesses. So the business of the fashion industry is highly artistic by nature. Growth is not the only main goal of the LVMH group and not its main priority as well. To create the desirability effect, not only the chief designer must be good, the marketing team, production team, and the creative team must also have a strong talent and sense of the market that they operate in. So once that talent leaves, then the brand will also fall with it. This is quite similar to a restaurant where the head chef leaves, then the quality of the food drops, right? So I believe that the chairman of LVMH has vast experience and track record in building the LVMH group to what it is today. I know that he will continue to be able to identify talent in each segment of the business. The LVMH portfolio is also well diversified and should be able to withstand any shocks to a single brand failure. Okay, regards to the opportunities, The reason I invested in LVMH Group is not so much just because of their crown jewel, Louis Vuitton. It's mainly because I saw a growing opportunity in their fast retailing segment, Sephora. I always loved how Sephora disrupted the cosmetics retailing industry worldwide. Gone are the days where Japanese departmental stores, such as Takashimaya, if you have heard of them, or Isetan, for example, used to house their cosmetics department on the ground floor levels. It is also important to note that many women still shop for cosmetics physically and cannot really do so online, as it is important to try them out physically. Therefore, the cosmetics business is a big opportunity for the LVMH brand, which might not be priced in yet. So here, this is an article screenshot about the new outlet launched at a Sephora branch in Queensland. Sephora houses different cosmetics and skincare brands that will change each season. Most of these brands are not owned by the LVMH group. Sephora's target market is mainly the younger female population aged between 17 to 30 years old. Sephora seems to have more success with Westerners rather than Asians and have built great success in countries like USA, Europe, and Australia. It is therefore interesting that in my home country where I live, Singapore, Sephora has also begun to show popularity among young adult Singaporean girls, which has good penetration. So for the trends, competition in the fashion business is cutthroat. Many top-tier luxury brands have come and gone over the many years. Staying relevant for a long time in a crowded consumer world is a difficult thing to do. The good thing about the LVMH group is that their current team is indeed very good at refreshing the brand's product mix. For example, from LV leather goods in the 90s to now fashion wear and partnerships with famous designers to create limited edition items. This will make consumers keep wanting to buy more of their portfolio brands. Okay, let's now look at LVMH segmented revenue for Q4 2023. The largest share of revenue comes from fashion and leather segment at 56% revenue share. All other segments take around 10 to 30% revenue share each. All segments saw a strong quarter-on-quarter improvement in revenue. This is led by an overall growth rate for the fourth quarter, quarter-on-quarter growth at 20%. My conservative estimates is that for the first half of the year, revenue will still grow, but at a slower rate compared to the first half in the previous year. Estimated growth will be around 4.5% to 5.5% in revenue growth ballpark for the first half. Let's now look at the sales contribution based on the geographic locations of its customers. Revenue shares mainly came from Asia, ex-Japan, in 2023 at 31% and is up from 2022. This share of revenue shows resilience in the Chinese market for LVMH and continues to be an important market for the LVMH group. US and Europe both hold similar revenue shares at 25%, both down from 2022, signaling slightly weaker macroeconomic growth in both the US and the Europe. I expect both US and Europe to have similar market shares or slightly lower in 2024, while Asia should see much better performance in terms of revenue shares. Now, we shall look at a peers segmented business. In this case, the Hermes Group. Recent results to compare, so you get a better picture of both companies' relative performance. So both Hermes Group and the LVMH Group have quite similar business profiles, as they both operate in the high fashion business. Both have achieved success in creating desirability and a cult following. I will attempt to compare Hermes segmented sales and make a comparison to LVMH in terms of performance and valuation. Hermes Q-on-Q performance, quarter-on-quarter performance for its leather goods business grew 12%, while LVMH grew 15%. At first glance, both are quite close in terms of percentage growth, comparing the quarter-on-quarter performance. But you must bear in mind here that LVMH grew on top of a larger base, as Hermes sells lower volumes yearly due to its business model. Even though Hermes operates at a top-tier luxury space, similar to that of LVMH, and has similar distributions worldwide, Hermes operates on a rather artisanal approach, only producing limited quantity of handcrafted products a year, limiting its supply. The performance of Hermes year-on-year proves a much better growth at 6.5% for its leather goods compared to LVMH. Hermes' share of revenue in the leather goods business takes up the largest portion at a 41% revenue share, while clothing holds a 30% revenue share. The spread of its portfolio is also quite well dispersed and is similar to that of LVMH. Therefore, none of its business is highly concentrated. Hermes produces strong net margins above 20%, and this sort of business will command high earning multiples. Therefore, you will notice that its current PE is at 36 times and is higher than that of LVMH. I also will be breaking down LVMH valuations later in this video, so stay on to watch. Let's now take a look at LVMH management outlook for this year. Management of LVMH is unlike any other that I've seen in other companies I invested in. The management at LVMH is hesitant to provide color into the next quarter or any sort of guidance for 2024. This might be due to the nature of the fashion industry, where the business environment remains fluid and dynamic, and also because competition is rife, these forecasts have to be kept private. However, the takeaway from management is that management prefers to be less optimistic in terms of hyper growth and hopes that growth will in fact slow down instead. They believe that by slowing growth, craftsmen within a group can focus on quality instead of quantity and increase the desirability factor. LVMH portfolio companies like Loro Piana, Christian Dior, Haute Couture have to backlog orders due to the surging demand. Because skilled craftsmen and seamstresses are few and to train a new one takes many years, it is therefore quite interesting to be invested into a high fashion brand as they look at the economics different from other sectors of the business world. Bernard Arnault, the chairman, also mentions that he will be making changes to the board of directors in 2024 by nominating 2 more sons into the board to reduce the average age of the board. Management has also mentioned that the Chinese consumers is an important part of their customer mix, and as China has since opened up, management hopes that the Chinese will be able to contribute more to sales as compared to last year, as Chinese will start traveling outside of the country. So for the profit and loss, I have tracked LVMH P&L from 2005 all the way to 2003. LVMH has shown resilience in its revenue growth and consistent double-digit net profit margins since 2005. Margins have in fact improved since 2005, but declined slightly if we compare to the 2003 results, compared 2023 results to 2022. In fact, during both the global financial crisis in 2008 and 2009 period, and the COVID crisis in 2020, LVMH has not only managed to maintain its decent performance, but has also shown growth in revenues during crises. I've highlighted the crisis periods in yellow. This gives me confidence that LVMH business may be resilient even in times of a crisis. This could be due to the established high net worth customer base that they have acquired throughout the many years. High net worth are usually less impacted by a crisis. I've expected margins to improve in 2024? This is due to the fact that management has just mentioned in the outlook earlier that China is opening up and could create more opportunity for better sales. Hopefully, we can see net margins reach close to the 20% range, which would be a really healthy range for any business. Here, now we look at the expenses for LVMH in 2023 and compare them to previous years. Management mentioned that operating expenses this year was incurred mainly in the first half, but was offset by lower expenses in the second half of the year, thereby muting operating expense to grow at just 10% year-on-year in 2023 versus 24% year-on-year in 2022. And this is really good improvement in terms of operating expense growth. Cost of goods has also been very well contained and consistent, where gross margins for the past 3 years have maintained at the 68% range. Interest expense grew, however, understandably, as interest rates have gone up globally. On the balance sheet, LVMH net return on its assets is at 40% in 2023. This means that assets after deducting its debts paid on these assets still manage to generate double-digit returns. This means that any reinvestment for LVMH is kept low, and as internal funds are mainly used to fund its investments, providing superior returns on its assets. Debt is also manageable at an average interest rate across the board at 2.57%. With a times interest coverage of 24 times, is indeed very comfortable for LVMH to service its existing loan obligations. Current assets sits at a wide margin greater than its current liabilities. Management has also mentioned that half of its debt book has been fixed, while the other half is of variable rates. This makes it easy for management to control its liability obligations. Inventory turnover is at 4 times and is reasonable for a high growth retailer, high-end luxury retailer like LVMH. LVMH generated a free cash flow in 2023 of $8.1 billion, or 50 times its current valuation. Free cash flow have declined compared to last year, reflecting higher cost to interest compared to 2022, higher tax expenses, poorer inventory movements in the spirits and wines business, and higher operating expenses due to purchase of Grade A investment properties to house its outlets. LVMH also completed its $10.7 billion euro-dollar share buyback in 2023. With regards to valuation, LVMH current forward PE is at 24.5 times. Its median PE is at 28 times, while the industry PE currently sits at 23 times in 2023. Based on my PE forward valuation metric, LVMH share price to me should be around the 750 to 790 per share range. This will be a downgrade to my previous multiple valuation in September 2003 of 850 euros per share. My implied growth of LVMH based on the multiple of 24 times PE is 10.95% per year growth in terminal terms. Such growth rates expectations is risky to me and provide a narrow margin of safety in an adverse situation. The downgrade will reflect my expected slowdown of growth this year in 2024. Should management execute a slowdown or a pullback strategy to all these brands as mentioned earlier in my management outlook analysis? LVMH shares have since rebounded after the promising fourth quarter results announcement by 12% in one day. Based on my discounted cash flow calculations, LVMH should be priced at 228 euros per share, or 1.9 times its 2023 revenues. Current market cap of LVMH is however priced at 1.68 trillion, or 3.9 times its 2023 revenue. Based on my new grading system for companies that I review, I gave LVMH an overall grading of a B grade. So what does an overall B grade mean for my expectations for LVMH? I would say that LVMH is well positioned to continue its growth trajectory into the near future as a defensive business, and at current prices, the value seems to me as fair and sustainable. Hermes Group is priced currently at 36 times PE, while LVMH is just at 24 times. Should any near-term correction happen, I will purchase more of the stock. However, as mentioned earlier in my video, I do not expect to be earning alpha or superior returns on the LVMH group, as my margin of safety for LVMH is slightly too thin. So this is all for my video, and I shall sign off here. Do remember to smash the subscribe button if you like what you watch. For the win, guys, and see you in my next video. Goodbye.